COMEX registered silver inventories have collapsed below 40 million ounces, after withdrawals exceeding 47 million ounces in the first days of December alone. Over 60% of deliverable stock claimed in a single settlement cycle. Paper price lingers near $64 after touching $64.65, yet physical premiums spike 25 to 35% above spot in Europe and Asia. Lease rates surge past 120% annualized in pockets. Institutions evacuate vaults at record pace. Regulators issue no alerts. Media pivot to tariffs and equities. This is not volatility, it is rupture. The crash accelerates, paper illusion detaches, physical scarcity dictates terms. The fracture consummates where the system once absorbed shocks. For decades, concentrate from Mexico and Peru crossed oceans, refined in China, re-exported to refill Western vaults. Arbitrage sustained abundance because finished goods revenues outweighed raw retention. Now inversion locks in. Topcon dominance pushes panel consumption 30 to 50% higher. Chinese solar alone targets volumes devouring hundreds of millions ounces annually. Beijing's state trading licenses for 2026 to 2027. Announcement number 68 thresholds met only by aligned entities. Cap outflows selectively. October exports briefly relieved London, then halted. Concentrate enters. Refined bars stay. The gate seals not with proclamation, but calibrated restriction. This terminal pattern mirrors Gallium's 2023 zero export license drop. Prices doubled overnight. Then targeted. Here, foundational to electrification. China processes 40 to 50% global concentrate. West shut at capacity. Asarco gone, Europe regulated out. 10 years to rival, billions required, as fifth-year deficits hit 149 million ounces. Green mineral shift confronts self-imposed barriers. Rules demanding panels block silver processing for them. If you're sourcing in solar procurement and tracking these premium explosions in chains, share in comments how availability has shifted for you. Your view could map where strain turns critical. Consequences finalize across sectors. Commercial desperation overtakes all else. China's installations eclipse cumulative histories. Sector forecasts over 260 million ounces globally 2025. China driving retention. Western plants, Ohio, Georgia, Arizona, subsidize billions via Inflation Reduction Act. Bid into void, inputs mostly Chinese. Costs invert green deflation to inflation. Military completes lockdown. Silver and guidance, radar, hypersonics. Gallium rehearsal pales, silver denial stalls, arsenals silently. Geopolitics fuses logistics in endgame. Licenses bury market freedom. BRICS settle bypassing dollars. Silver-neutral hordes against fiat weaponization. Wealth transfers complete from printers to atom holders. History closes loop on 1970s OPEC quotas dictating without bans. Latin producers, over 50% primary, entrench. Mexico royalties plus state mandates. Peru, tax revisions capture 75% above $30. Political floor embeds at $50. Expansions halt. Safe jurisdictions premium. Pricing mechanism fails irreparably. COMEX and LBMA, leverage and trust built, buckle under physical demands. December raid, over 60% registered claimed. Industrial cover, not speculation. Shanghai delivery mandated asserts sole truth. Premiums the reality. Western spots zombie discount. Dual market crystallizes. Shadow nearing $90. Official damped. ETFs murmur force majeure. If tracking dual pricing from your markets, post in comments your read on Shanghai premiums. Do they signal new reference or anticipate convergence? Regulatory void. No vault warnings, no probes. Seals irreversibility. Resilient systems self-correct anomalies. Here inaction admits uncontrollability. Media fully diverted, war concludes in licenses and quotas. Samsung silver carbon anodes, solid-state locks inelastic demand. China's 70% battery grip cements. Process consummates. Deficits permanent fifth year, inventories decade lows, nationalism bakes higher floors, tech seals consumption. No abundance return. Geological walls, political taxes, industrial locks converge. Excess currency now. $100, irrelevant without bars. Crash. Triggered licenses, ends free market, blocks solidified. Asia retains processed, America's text extract, West rations remnants. If mining finance evaluating jurisdictions, share and comments how reforms reshape models. Does letting discount capture full risk? Military conductivity irreplaceable high-performance nodes. Denial total, not just industry, arsenals. Green agenda exposes hill. Net zero inflates via atom scarcity. Procurement panic fixed. Double orders, quota denials. Weak buffers luxury. Commercial necessity absolute. If electronics or defense sourcing spotting bottlenecks, detail and comments pick stress locations. Patents clarify scale. Historical mercantilism secured empire's resource denial. China consummates solar dominion. Finished export, raw hoard. Dual circulation achieved. Internal self-reliant, external dependent. Monetary torque finalizes. Silver people's refuge, fiat wars equals industrial. Data diverge precedents here. Post-comments closer version Y, especially BRICS flow trackers. Crash, not price drop, systemic implosion. Excess infinite cost. $100, nothing if unavailable. Infinity. Safe zones, ultimate premium. States seize excess. No resolution visible. Phase irreversible. Drains persist. Premiums widen. Silent oversight watches denial collapse. Fluidity return excluded. Blocks crystallized. Control transferred. Abundance myth buried. Process. Mid-December 2025. Record claims license barriers evident. Fixed. Free market dead. Reconfiguration dominates. No reverse side. If mirroring rare earth gallium precedents, share comments parallels divergences. Does silver scale force rapid accommodation or eternal fracture? COMEX registered silver has plunged below 35 million ounces by mid-December, after over 47 million ounces withdrawn in early days, more than 65% of prior deliverable erased in one cycle. Paper price hovers near $64. Physical premiums locked 30 to 40% above in key hubs. Lease rates spike intermittently beyond 150% annualized. Institutions accelerate exodus to bars. Regulators silent. Media cycle, tariffs, and indices. This is no pause, it is escalation. China's 21.6 to 21.7 export licenses fully enforced, refined outflows near zero, Western vaults echo empty, crash momentum builds unchecked. The rupture intensifies where equilibrium once held. Decades of flow. Latin concentrate to Chinese smelters, purified bars back west. Relied on China's need for export dollars outweighing internal hunger. Inversion now absolute. Topcon saturation drives per panel, silver 30 to 50% higher. Sector projections exceed 300 million ounces annual. Chinese draw alone. Licenses. Announcement number. 68 criteria favoring state aligned. Render re-export selective to non-existent. Brief October surge exhausted. Refined silver trapped. Concentrate welcomed. Bars retained. Gate not slammed, but precision locked. Pattern replicates Gallium 2023 license zeroing. Prices doubled weeks. Targeted then. Existential now for electrification base. China 40 to 50% global refining. West capacity dismantled. Asarco shattered, Europe compliance-driven exit. Decade rebuild timeline. Billions. Against fifth consecutive deficit year nearing 149 million ounces. Mineral-intensive green pivot hits self-erected choke. Mandates for panels and EVs preclude domestic silver processing. If solar or battery supply chains show these premium and delay signals for you, post comments detailing shifts in paste or bar access. Your frontline could pinpoint production halting thresholds. Consequences cascade terminal across industries. Commercial survival overriding all. China's deployments shatter records. 2025 global forecast over 260 million ounces, with Eastern retention dominant. Subsidized Western facilities. Arizona, Georgia, Ohio. Billions. Inflation Reduction Act fueled. Compete phantom supplies, inputs near exclusively Chinese. Green cost deflation, fully inverted inflation. Military seals exposure. Silver conductivity in guidance chips, radar arrays, hypersonics. Gallium precedent dwarfed. Silver cutoff grinds arsenals without kinetic exchange. Geopolitics logistics merge and phase. licenses into free market. BRICS settlements, dollar bypass, complete key lanes. Silver neutral reserve hoards versus fiat leverage. Wealth shift printers to atom controllers finalized. History mirrors 1970s, APEC quota discipline over outright bans. Latin primary, over 50% aligns tacit. Mexico royalty hikes state mandates. Peru, windfall revisions sees 75% excess above $30. Political floor cemented $50, not geology. Fiscal. Nevada Ontario premium, Latin re-rated risk. Pricing detaches irretrievably. COMEX LBMA, leverage trust constructs, crumble physical claims. Mid-December, claims exceed 65% registered. Pure industry hedge pre-failure. Shanghai delivery mandated sole arbiter. Premiums reality anchor. Western spots lingering paper denial. Duo regime hardens. Shadow $90 approach, official suppressed. ETFs, force majeure whispers grow. If dual market visible your operations, share comments Shanghai premium interpretation. New global benchmark emerging, or convergence expected. Regulatory absence. No vault alerts, no position scrutiny. Confirms phase lock. Functional systems remedy disparities. Here, void concedes governance loss. Media narrative elsewhere, conflict peaks, licenses, quotas. Samsung silver carbon solid state chemistry inelastic demand irreversible. China's 70% battery dominance unassailable. Process mid escalation. Deficits entrenched. Fifth year. Inventories multi-decade lows. Nationalism embeds elevated floors. Tech locks consumption perpetual. Abundance reversal impossible. Geological caps, political levies, industrial seals converge. Excess supersedes price. $100 meaningless absent bars. Crash. License triggered. Accelerates free market demise. Blocks entrench. Asia processed hoard. America's taxed source. West remnant ration. If jurisdiction risk modeling money, post-commons reform impacts valuations. Latin discount fully priced or WAG remains. Military irreplaceable high-performance conductivity. Denial comprehensive, civilian wines and defense. Green narrative hill exposed. Net zero inflationary atom constraint. Procurement fixed desperation. Orders doubled, licenses cited refusals. Weak inventories rarity. Commercial imperative total. If electronics defense chains bottlenecks evident, describe common stress peaks. Sector patterns reveal breadth. Historical mercantilism. Empire built, resource starvation rivals. China replicates solar, finished export. Raw, perpetual retain. Dual circulation complete. Internal sufficiency, external reliance. Monetary premium balances industrial. Silver refuge, fiat wars matches necessity. Data diverge historical resolutions here. Comments closer trajectory Y, BRICS observers especially. Crash systemic access, infinite valuation. $100 irrelevant, unavailable. Infinity equation. Safe jurisdictions final premium, states excess capture routine. No containment site. Phase locked escalation. Drains deepen, premiums broaden, silent oversight denial erosion witness. Fluidity restoration precluded. Blocks permanent, control transferred, abundance fiction interred. Process December 2025, record withdrawals, license enforcement manifest, momentum compounds, free market terminal, reconfiguration, dominant reversal absent. If rare earth galleon crisis comparison, share comments key parallels divergences. Silver magnitude compels swift recalibration or prolong indefinite fracture. COMEX registered silver inventories have cratered below 30 million ounces by late December, with cumulative withdrawals since early month surpassing 60 million. Over 70% of November's deliverable stock erased in weeks. Paper price clings near $65 after repeated failures above $66. Physical premiums entrenched 35 to 45% above spot across continents. Lease rates flare routinely over 200% annualized and isolated trades. Institutions complete vault evacuation. Regulators absent any statement. Media cycle unrelated distractions. This is no consolidation. It is consummation. China's export license regime for 2026 to 2027 has sealed refined outflows. Western physical base evaporates. Crash phase irreversible. The terminal rupture manifests in the walls themselves, where any pretense of equilibrium has vanished. Shanghai inventories scrape below 700 tons, lowest since records began meaningful tracking, after quarterly losses exceeding 400 tons, equivalent to the permanent disappearance of a substantial fraction of global deliverable reserve. The West, architect of its own refining dependency, confronts absolute cutoff. The decades-old circuit, Latin concentrate shipped east, purified, bars returned west, collapsed when internal priorities overrode export incentives. TOPCon, near total adoption, elevates panel silver demand 30 to 50%, Chinese sector alone absorbing volumes that dwarf historical totals. License thresholds. Announcement number. 68 parameters accessible solely to state-integrated channels. Render re-export obsolete. Any residual flow extinguished post-October. Concentrate still lands. Refined silver embedded permanently. The mechanism not bent outright, but engineered to retain. This final configuration replicates yet surpasses gallium's 2023 license nullification. Prices doubled in days. Then surgical, here infrastructural to the electrification foundation. China commands 40 to 50% global concentrate processing. Western capacity systematically eliminated. Asarca demolished. Europe compliance forced abandonment. Rebuilt horizon a decade minimum. Trillions equivalent. Against entrenched fifth-year deficits approaching 149 million ounces. The mineral-intensive green reconfiguration collides with barriers it legislated. Mandates compelling panels and EVs simultaneously prohibit the silver purification required to produce them. If you're embedded in solar, battery or electronics procurement and witnessing this premium and availability collapses firsthand, share in comments the precise thresholds where your lines are impacted. Your ground-level data could delineate the exact production breaking points. Consequences achieve totality across sectors, where commercial exigency has eradicated every other consideration. China's annual installations now exceed all prior global cumulative milestones. 2025 global consumption projections breached 270 million ounces, with Eastern Internal Lock dominant. Western facilities, Ohio, Georgia, Arizona plants, fueled by Inflation Reduction Act billions, operate against absolute scarcity. Silver paste routes near monopolized eastward. Input costs render subsidized output unviable. Green deflationary promise fully transmuted inflation. Military exposure absolute. Silver's unique conductivity in guidance systems, radar matrices, hypersonic nodes. Gallium precedent trivialized. Silver interdiction immobilizes arsenals without. Declaration. Geopolitics and logistics achieve complete fusion and closure. License architecture enters free market concept. BRICS transaction corridors, dollar-independent, silver as neutral sanctuary accumulates versus fiat instrumentalization. Wealth reallocation from printers to atomic custodians consummated. Historical closure on 1970s OPEC quota mastery without formal embargo. Latin primary supply, over 50% global, coalesces irreversible. Mexico royalty escalation plus mandatory state equity. Peru windfall mechanisms seizing 75% increments above $30 threshold. Political price floor calcified at $50, independent of geology. Pure policy. North American safe haven deposits ultimate premium. Latin assets perpetual jurisdictional discount. Pricing apparatus disintegrates beyond repair. COMEX and LBMA constructs. Leverage, trust and delivery, cash settlement. Shatter against unrelenting physical reclamation. Late December claims exceed 70% remaining registered, undiluted industrial fortification ahead of inevitable settlement fracture. Shanghai Gold Exchange, delivery compulsory, sole surviving arbiter. Premiums there constitute undeniable reference. Western quotations reduced to spectral paper relic. Dual structure petrifies. Shadow market approaching $100, official channel artificially restrained. ETF documentation begins referencing force majeure contingencies openly. If the dual pricing regime is observable in your operational reality, post comments your assessment of Shanghai's emerging dominance. Has it already supplanted Western benchmarks in practical terms? Or do you detect any residual convergence pressure? Regulatory vacuum. No world depletion acknowledgements. No emergency position interventions. Certifies the phase as beyond reclamation. Systems capable of resilience address imbalances. Here, sustained silence constitutes admission of sovereignty forfeiture. Media narrative fully decoupled. Conflict resolved exclusively through license and quota instrumentation. Samsung's silver carbon solid-state formulations, combined China's 70% battery manufacturing supremacy, render demand structurally inelastic without horizon. Process achieves completion. Deficits institutionalized fifth consecutive year. Inventories at generational nadirs. Resource nationalism permanently elevates price floors. Technological imperatives seal consumption perpetuity. Reversion to abundance structurally precluded. Geological ceilings, political extractions, industrial imperatives converge irrevocably. Access eclipses nominal price. $100 quotation meaningless absent obtainable bars. Crash, precipitated and sustained by license architecture, has extinguished the free market paradigm. Regional blocks ossified. Asia processes and retains, Americas extract under tribute, West administers scarcity. If you're modeling mining exposure across jurisdictions, share in comments how these entrenched reforms have recalibrated your frameworks. Has the Latin discount now internalized the full spectrum of political extraction risk? Military conductivity remains categorically irreplaceable in critical performance envelopes. Interdiction scope exhaustive. Civilian throughput and strategic capability simultaneously. Green transitional narrative exposes its foundational contradiction. Net zero aspiration rendered inflationary through engineered atomic constraint. Procurement behavior calcified desperation. Order multiples routine, responses uniform quota citations. Inventory horizons measured in days, not weeks. Commercial survival imperative unqualified. If defense or advanced electronics chains reveal identical constriction patterns, detail in comments the precise nodal failures emerging. Aggregate perspectives define systemic breadth. Historical mercantilist precedents constructed empires through calculated resource denial to rivals. China has executed the contemporary analog with solar infrastructure as the imperial vector. Finished systems exported globally, enabling raw material indefinitely internalized. Dual circulation objective realized. Internal cycle autonomous, external cycle tributary. Monetary premium achieves parity with industrial. Silver, as populist sanctuary against currency weaponization, now matches its technological indispensability. Precedent data diverge markedly at this juncture. Post comments which resolution pathway appears more congruent and why, particularly if monitoring BRICS commodity settlement evolution. Crash constitutes not downward price convulsion, but systemic revaluation, where excess acquires infinite denominator. $100 quotation renders moot without counterpart delivery. Effective infinity. Remaining safe jurisdictions command terminal premium. Sovereign entities institutionalize excess appropriation. Containment horizon absent. Phase irreversibly terminal. Drainage trajectories deepen. Premium differentials widen. Tacit supervisory observation witnesses denial architecture collapse. Global fluidity restoration categorically excluded. Block formations immutable. Control transfer absolute. Abundance postulate entombed. Process. Crystallized late December 2025 through unprecedented claims and license enforcement totality, stands consummated. Free market extinguished, emergent configuration sovereign without discernible reversion vector. If paralleling rare earth or gallium episodes in analytical framework, share comments principal convergences versus decisive divergences. Does silver's compounded magnitude compel accelerated systemic accommodation or perpetuate indefinite structural fracture?